Hi, and welcome to our Aim for Good video series. We designed Aim for Good with the hope that we could connect individuals in this community and provide different resources to shine light on local nonprofits, people that might be in need, any different resources that we could provide out there for you.
This video series is intended to provide relevant information from industry leaders and also connect and highlight our colleagues, our friends, our clients to nonprofits in need.
Please stay tuned at the end of the video as you'll see different links that we discussed during the conversation so that you'll be able to contact them directly and help anyone in need. And also, make sure to subscribe to our channel as we'll be updating these videos on a regular basis. Thanks again for joining us.
Before we introduce George, just to kind of go through, we want to have an informal conversation with some industry experts and talk about what's happening in their world and link it to information that we think is important in your world. George is someone I've gotten to know this past year in the home loan and mortgage industry. He's someone that we trust, that we feel is going to give honest and good information. I know you've been a consultant, George, for over 13 years and a top lender for 4 years running with Scotsman Guide. And we're just grateful that you're taking the time to share your knowledge, your expertise, and some information with our clients and friends. So thanks for being here.
My pleasure. Thank you very much for having me.
Sure.
Yeah, George has been a good friend of ours for a long time, and we look forward to him sharing some information right now with the markets the way they are, and mortgages and refis and different deferral programs out there. We just thought it was very important to get this out to the community and share some of his insights. So we're going to ask him a few questions, and we'll take it from here. So, George, first question for you. Big topic right now is the option of deferring your mortgage payment or a forbearance type concept. Can you give a little insight into what those two terms mean? What's good? What's bad? About those?
Absolutely, and that's a great question, Mark, and it's a hot topic right now in the industry, and I can share as much as I possibly know about it and give advice. However, the best advice to give to every borrower that's looking into doing something like that is to contact their servicer directly and to find out exactly what they have to offer. So what it is, when you have a forbearance, it's put in place obviously for people that were directly affected by the coronavirus. It's not free money by any means. And the way some lenders are structuring this is they will let you skip on your next 3 months payments, for example. So you're not making the next mortgage payments for the next 3 months. However, at the end of the 3-month forbearance period, the total amount will be due. Now, to me, logically, that is not a very good option because most people after the 3 months are not going to have that full amount of money to pay back to the lender. So in that case, what the lenders are doing, if you don't have the money, they will then make an agreement with you. And again, depends on servicer to servicer. Everybody's a little different, but they'll tell you, for example, okay, you don't have the funds, you're still out of work, here's what we need to do. We can spread out the payments over the next 12 months, or we can put it in the back of the loan. No matter what option arises, it's almost, to me, it makes it sound like a, back in the day when we had the short sales and everything was going on with the crisis, there were, I don't know if you remember, loan modifications.
Right.
And loan modifications didn't do so well. I know some people that were successfully done with, and I know a lot more people that just got so frustrated and ended up never getting the loan modification. But nevertheless, this is not the case right now. The case is going to be, they're going to help you. However, you have to be aware of the terms and of the consequences afterwards, because even though they're saying that they're not going to report you late on credit, I've been talking directly to Tiffany, which is the owner of Dedicated Credit Repair here in town, the Marietta agency that does credit repair. And just a couple of days ago, she posted that she saw the first negative impact on somebody's credit in regards to forbearance. The the more alarming thing was that they didn't even get the forbearance. They called their servicer to inquire about it, and somehow that verbiage went on their credit and reduced it by about 30 points.
Oh my gosh.
So,
that's not good.
so we have to be careful. It's there for people that need it. It's not, I would advise, if you can still make your payments and you're still working and everything is going favorable, keep making the mortgage payments. That's the best advice. If you truly need it, yes, that's what it's there for. Take advantage of it. However, know the implications, and know that also down the line, a broker like myself, if I'm trying to do a loan for you, if you decide to sell your house and buy another one or refinance it, and it was under forbearance, that it again may have an implication. We don't have the guidelines yet because it's too new. However, it may be looked at as a short sale, which back in the day we couldn't refinance a loan for 2 to 4 years, depending on the program. So there's going to be some kind of implications that are still in the works. And my best advice right now is call the servicer, find out exactly what they're offering, make sure it's something you are needing to do, and just kind of process it from there according to what's going to best benefit that individual borrower.
And just a quick follow-up. So what you're saying, when they contact the servicer, is it up to that lender to decide if they're going to, like, the details of what they're going to offer, or are they getting direction from the federal government?
They are getting direction from the federal government, yes, but they will get direction from their servicer too, because some servicers are doing forbearances, some servicers are doing deferments. So if the deferment is, for example, if they tack, I've heard them say as well, 12 months. So you're not making your payments for 12 months. We'll make your loan, instead of a 30-year, a 31-year, just as an example. Is everybody doing that? No. The people I talk to directly, which is one of the largest nationwide brokerages, the representative there told me that what they are offering is that 3-month deferment period, and then after that they will reevaluate depending upon if you can show that you're truly not at work, that you lost your job and that you're not working, or they won't extend or defer it any longer if you're still employed. So although you don't have to prove at the beginning initially, all you have to do is attest that you've been affected by the coronavirus. After the 3 months, they're going to reevaluate, and they're going to want to know, what's your standing now? I mean, are we just doing this to do it, or do you have a need for it? And then they're going to reevaluate and see how they're going to arrange their repayment plan for whatever is owed. It's a touchy subject, because think about it, if everybody does that, the servicers are going to get in trouble, because they still have to pay the investor that owns the loan. They still have to pay taxes, insurance, and everything else. So the liquidity is what they will be affected by.
I think that's a big gap that we're seeing right now in all of these federal programs. There's been a lot of conversation about the mortgage servicers that are being left out of the funding to be able to take care of it. So hopefully that'll, be adjusted. I think one thing I pulled out of what you just said is, when you call your mortgage servicer, to make sure that you prerequisite the conversation, that the conversation is not going to impact your credit. I mean, based on what you just said for that poor person that already had a drop, that's pretty odd, so it's something good to know.
It is, because that's contrary to what we've been hearing, because what we're hearing is that, it won't affect your credit. Right. You're not going to get any lates on your credit. We're not going to report it. So that's what we're hearing. But again, this is one example of what happened that's contradicting what we're hearing out there. So I would be very cautious when doing it. I would call the servicer directly. I would get all the information I can directly from the servicer, and maybe even getting it in writing, whatever you can do to ensure that it's going to affect you as least as possible in the future. Got it.
So I guess to flip, maybe to find some silver lining in all this, right? The most common question I'm getting from our clients when they're calling in talking about their mortgage is the refi option, and where interest rates are, if it's a good time, how they can take advantage of it, assuming that they are still employed and earning and doing well. I guess the next thing I wanted to just ask you to hit on is just where rates are at, where you see them going, when we get questions about the timing, how urgent should our clients be if they're trying to get a good rate. We're hearing recently that it's really hard to get a refi completed right now. So maybe you could touch on that for a little bit.
Sure. So the silver lining is that rates dropped again. So they came back down. So we had that short period that after this coronavirus hit, that the mortgage industry went crazy there for I would say a couple of weeks. But now if you're looking at interest rates, for example, conventional is running low threes, 3.375. We're still getting FHA and VA locked in at 2.875. Again, that's with good credits, excellent credits, and so forth. But what you said is correct also. The lenders have protected themselves by applying overlays. So they've made it a little bit harder to lend, especially when it comes to lower scoring borrowers, lower FICO scores.
Got it.
However, when you have a client right now that is still working with good credit, and a lot of people have a good amount of equity, but do have higher rates, it is a huge advantage to get into it and to take advantage of these historically low rates and refinance the loan. The benefit there too is that not only they're going to reduce their interest rate and save money on their monthly payment, they also get to skip a mortgage payment through the refi. They also get a refund if they have an impound account with the current servicer that they have. So when we pay them off, that money is going to come back to them, the impound money that they were holding. So that helps them through this period. So instead of somebody that's still at work, has a good amount of equity, instead of them looking into that deferment program or forbearance, a refinance may be a very good solution that will not affect them in the long term, and at the same time save them a boatload of money in interest in the long term. So cashing out is another option. A lot of people have equity, and to take a little money out, to lower your interest rate, take a little money out, pay off high interest debt, or just keep money for reserves to get through this time is again something that's benefiting a lot of clients right now. And that's what I'm doing a lot of, and that's the thing we're concentrating with borrowers, is to kind of see how we can save them as much as possible, not just with the mortgage rate, but overall finances.
So during this period of, social distancing and everything else, a lot of the traditional, models have gone out with meeting with clients or, appraisals or things of that nature. I know that your platform is pretty technologically advanced, but, could you just briefly walk us through as far as the process goes? I mean, is there still in-person closing documents that need to be signed? What can somebody expect in this era that we're in right now?
Yeah, absolutely. Good question there as well. So as far as the appraisals, we are getting a lot of appraisal waivers at this time when it comes to refinances, depending on the loan to value. So how much you owe versus how much the house is worth. So that takes care of that side of things. If an appraisal is required, we have companies now that are doing virtual appraisals to where the borrower can call, FaceTime with the appraiser and walk around the house. The appraiser will ask questions and put the report together that way. They are also having options of doing drive-by appraisals. So we're trying to abide by what's going on and accommodate the situation, and we're having pretty good success in doing so. The lenders are adapting all those methods of handling that part of it, that piece of it. As far as mobile notaries, right now in California, we still need to sign the loan documents. There are some states that have gone e-signing, even the final loan docs. They're doing it through e-sign. However, here we don't have that quite yet. So we are still dealing with notaries, and again, they're taking the right precautions, just like home inspectors. They'll come in with the mask, with the gloves, and 6 feet distancing and all that. They're respecting all those rules and making it as safe as it can be.
Great. Thank you.
And so just to kind of, I know Mark has a question about your charitable connections and so on, but if someone wants to get a hold of you or connect with you to run through if a refi or is a good idea right now, what's the best way to get a hold of you?
Yeah, thank you, Adam. So cell phone or email is probably the best way. My cell phone number direct is 951-905-9161. And email address is theloanguy1@gmail, and that's spelled out, the loan guy, and then the number 1@gmail.com.
Perfect. And you can call, I mean, as far as I understand, is you can call late at night, on Sundays, anytime now that we have your cell phone. That's perfect.
You are on the hook, George.
I'm on the hook, and that is of course. And if I don't answer, leave a message, and I'll get back to you.
Yeah. This may go viral to 30 million people. Well, just to piggyback on what Adam just said, obviously the reasoning behind these videos and interviewing folks like yourself is to provide information locally through our Aim for Good, video series. And in that same vein, we are looking at, trying to highlight different charities that are in need, and, people like yourself, friends, clients of that nature, and just highlight, maybe somebody or some local organization that you like to give to. And so do you have a charity at this point that you'd like us to reference?
There are a lot of great ones out there. Community Mission of Hope and Rose Again Foundation is two of our favorites. And so that would be if I had to pick two.
Perfect. All right, we'll put more information on the screen so people can link through to those. So thank you. And thank you for your time and your information and perspective on these volatile times in the mortgage world. So I appreciate it.
You're very welcome. I'm very honored to be with you guys and to be here. Thank you for having me.
Thanks a lot, George.
You're welcome. Take care now. Stay safe.
Right. Bye-bye.
Bye.